Hi, we're Oxygen Conservation, and this is the Shoe Room Sessions. Hi, Roland.
Hi.
Welcome to your Shoe Room session. Thank you for coming. Easy question to start off. Who are you and what do you do?
So I am Roland Bull. I'm a partner at Bidwells in Cambridge, based in Cambridge. I'm a land agent. Most of my work is managing institutionally owned investment property, so rural property, land. We look after about £1.5 billion of land and all the various bits that come with that for the likes of 15 Cambridge and Oxford colleges, Wellcome Trust, several pension funds, and others. And the reason I'm here, my sort of connection with this line of work is that I studied ecology as an undergraduate and have for the last 15 years or so had what until recently I've described as a sideline in environmental work, doing a lot of contractual and financial structures for large-scale habitat restoration projects, things like that, largely out of personal interest. I did the first biodiversity offset in the Essex pilot 10 years or so ago. So say I've been sort of fiddling around with bits like that, and then all of a sudden it's become quite a big business for us. So yeah, I'd like to think it was foresight, the sort of convergence of policy and sentiment around this topic, but it was, good fortune, I think, more than anything. So.
I have a rule that the harder you work, the luckier you get. It just gives you a bigger surface area of luck to stick to.
Yeah, I'd say, the fact that I'm now able to spend a lot of my time doing, fantastic work with nice people on really interesting projects. As I say, there's a lot of good fortune in that, I think.
So in your opening, you quite quickly went past $1.5 billion, which is an incredible number, an amazing portfolio of assets, and working with some of the sort of coolest, high quality, sort of iconic institutions. That's an amazing job. You just must wake up every day being like, this is the one. This is the portfolio I'd want to look after. These are the right people. It just must feel pretty.
Yeah, there's certainly no question. If that's the sort of work you want to do, I mean, I've been incredibly fortunate at Bidwells. It's a fantastic business. Having given me the opportunities I've had. The business is 185 years old next year. That sort of work is bread and butter. That's what Bidwells has grown to service those types of clients. So it's they've been doing a lot. They've been doing a long time before I arrived, but it's something that I found that I was quite well suited to in terms of the analytical aspects of trying to understand financial return from those sorts of assets. I mean, they're quite complex assets and very varied, and the clients on the whole are very well informed, bright, engaged, dealing with Cambridge bursars, portfolio managers at big institutions and things like that. They're nice people to deal with, so it is very rewarding. Yeah.
Okay, so you gave us a little bit about the background, but I'd like to take us through your career contents page. So imagine the Roland Bull book. What are the chapters? So starting off with where you grew up and what happened, then take us through to how we got here today.
So I grew up in the Cotswolds. I was born in Australia. My parents were both marine biologists, which I guess probably lends some background to, my interest generally in ecology and things like that. I grew up in the Cotswolds. I think a large part of the route I took was actually down to one good A-level biology teacher who taught. I did study biology. Half the course was sort of ecology side. Really enjoyed it. Wasn't very academic. Did bare minimum to get by at school. Did bare minimum, to be honest, to get by at university, my undergraduate degree. But studied ecology. Thoroughly enjoyed it. I then kind of fell into. So, went home after uni. Got a job actually as a stonemason, which I did for a couple of years. Something I've always loved. Really interested in that side of things, and realised I wasn't going to be able to do that forever. And sort of chance encounter with someone at a party, 3 o'clock in the morning, sort of drunken conversation. What do you do for a living? And this chap was a land agent. Explained to me what he did, and studied this master's degree. And I sort of woke up with a sore head in the morning. Remember this conversation. Had a look on the internet. Thought, yeah, that does sound quite interesting. And did a master's degree, and was looking for jobs. Applied to Bidwells. moved to Cambridge and have been there since. So
it's incredible, isn't it? The sort of intersection of passion for the environment, the awareness and knowing land, and socialising and relationships is a big part of what you do. So that's still come through to the role today.
It's a huge amount. Engaging with, and that's what I enjoy is dealing with reasonably technical issues, problem solving, but engaging with nice, smart people on interesting projects, and that's, as I say, I'm incredibly privileged to spend the vast majority of my time doing exactly that.
It sounds like you love that complexity and that variety and difference.
Yeah, definitely. Yeah.
Nice. Can you articulate a standard day, or maybe if not a day, a week? What does your role?
That's a difficult one. So, I mean, it's varied a lot even over the last few years. We've evolved quite a lot. As I say, the institutional client work, I spend a lot of time with clients in, might be investments committees and things like that, talking about portfolio performance, activity that we, so for that portfolio property that we're managing, it's a really comprehensive nuts and bolts management service. We're collecting rents, advising on acquisitions, disposals, developments, the whole lot. So I say a big part of it is engagement with those client owners on strategy and issues like that. But as I say, certainly in the recent past, I've been spending probably 40 or 50% of my time working on environmental projects. So I act for about 12 wildlife trusts, quite a number of high profile other conservation NGOs and big private landowners who are pursuing, particularly private market, biodiversity net gain type.
And how many years ago would we have to go back where that wasn't a feature of what you were doing?
Well, to say, I've always sort of done bits and pieces, and then certainly a lot of wildlife trust work. I've built up the work that I've done for those.
Didn't you start by volunteering for the Wildlife Trust?
Well, I did actually. I turned up to Beds, Cambs, Northants Wildlife Trust. I've actually done a bit for Surrey. So they have these very large areas of lowland heath restoration on range danger area, big MOD sites across Surrey. So I was doing a bit of that, and we got given in Bidwells' 180th year, 175th year, so it'd be 10 years ago, some extra volunteering days for staff. And so I turned out the Great Fen Project, which is the biggest lowland peat restoration initiative in the country. It's 9,000 acres. The idea is linking two national nature reserves. And I'd sort of seen it, thought, what a fantastic project. So I turned up to offer them some free professional services, looking at ecosystem service trading. That was the idea, say 10 years ago it was. And that didn't actually really come to anything, but shortly afterwards they appointed us to do all the farm management and advise. I
love the foresight in doing that, because I'd heard people in every capacity turn up and want to plant a tree or lay a hedge or whatever, but never turn up and go, I'd really like to volunteer by offering professional services. That's such a lovely approach.
But it genuinely wasn't with the expectation of then being appointed by them to do, professional work. It was genuinely what can I use my time effectively for? And, it occurred to me that actually spending time doing, sort of day job of professional advisory work was more valuable than offering to plant a tree for them, basically.
Yeah.
That was the initial idea. But I mean, this year we've literally just bought the final, what provides the contiguous link between the two national nature reserves. So that has, 10 years later, that happened earlier this year with Heritage Lottery funding. Can you just touch on why that connectivity is important for those people who aren't as familiar with it? Well, yeah, I mean, landscape connectivity, it's obviously, particularly for habitats like that, those national nature reserves are otherwise, completely isolated fragments of remnant habitat that once did cover a vast swathe of East Anglia. And it's the same across, as the majority of the English countryside. There's these little pockets of isolated habitat that, particularly with, further pressure and climate change, that connectivity is increasingly important. It's one of the reasons we were so keen on the Lay-on estate on Dartmoor. It was kind of the keystone to connecting 3,000 acres across East Dartmoor, and as a result of that, that's become one of the landscape recovery area focuses for DEFRA. Us bringing that private land ownership in the middle of ownership by Woodland Trust and Wildlife Trust and the National Park and things like that. That connectivity was so important there for us as well. If we go back to your institutional client,
5 years ago to now, how have the conversations about how they're looking at land and nature changed?
Unbelievable. I mean, I can't
really that distinct.
I cannot tell you what a change there has been. I mean, certainly 10 years ago, I'd probably be doing them a disservice to say 5 years ago, but it's certainly, I mean, some it's still the case for, but I would say the majority of Oxbridge bursars 10 years ago would have regarded the environmental aspects. You know, they had some personal interest, but they would typically have regarded it as a distraction from their day job. You know, their primary focus of delivering financial return from an endowment, basically, and they would have had some fellows talking about net zero and biodiversity issues and things, but you know, there really wouldn't have been any particular mandate to do things within a portfolio. And you know, fast forward, say, 10 years to now, and we've literally got to the point where there are individual bursars, and without saying too much, but you know, making competitive net zero statements that you know, they probably don't know really when they're making them quite what it's going to take to achieve. You know, because they want to be seen as the you know, the first or the best, you know, in terms of what they're doing with endowments, and you know, it's really fantastic. And one of my roles, I actually sit on Trinity. So Trinity is the largest of the Oxbridge colleges. The endowment's sort of, you know, over 2 billion. You know, it's by some margin, and Trinity has gone a really long way. And you know, it's, as I say, really, really encouraging to see that, you know, they've got a full-time sustainability officer who's done a phenomenal job with, you know, really specific and targeted interventions within the portfolio, looking to drive real-world change, and you know, understanding where that change can be driven, taking account for and full responsibility for, you know, scope 3 emissions across the portfolio. Where are the opportunities to, you know, not just carbon, but biodiversity as well. And you say, yeah, really fantastic. So I sit on Trinity's Responsible Investment Committee, you know, looking at coordinating those sort of initiatives.
I'm glad I'm not running your diary.
Yeah,
making it work. So leaving the colleges aside and sort of a broader market commentary, in the past few months, certainly year or so, there's just been almost a rush to announce the next target, the next commitment. Do you think that's come with that wave of not knowing what it's taken to get there?
That's definitely the case for some. There's absolutely no question. And you know, is it a bad thing? I mean, you know, some people will definitely be embarrassed when it dawns on them what it will take, particularly where, you know, people actually understand, you know, science-based targets and trajectories and you know, what the decarbonisation component will actually entail and the associated costs.
Yeah.
But the fact that the commitments are being made and people are, you know, there to be held to account, I think can only be a good thing. And it's, yeah, I'd say the change, I think, is a very positive one.
We need to do something right. And I think those commitments are so important in making people take notice and beginning the step of driving positive change and doing something about it. I remember being a bit of a zealot to data when I was doing my PhD, that I sort of viewed if the data wasn't right, you're better not having any, whereas I'm much more in the mold now of get some data and then work on improving it rather than having none.
Yeah, exactly that. And that's the case for certainly when we've been doing baselining large property portfolios. You know, the data is by definition imperfect.
Yeah.
But you've got to start somewhere. You've got to have something to start making decisions on, and you will improve it over time. And actually having a plan for that data improvement and collection and you know, going through the process helps enormously in understanding, you know, what it takes and, you know, where the gaps are and you know, actually creating that plan to try and, you know, as I say, improve and refine data over time.
So let's continue that theme through to the world of natural capital that we find ourselves now in. What does natural capital mean to you, Roland?
In the context of, you know, sort of, you know, real definition of the value of all the natural resources that we rely on as a society and as I mean, I guess in terms of, you know, when it's often talked about in terms of private markets and finance, I mean, my day job, my instinct is always to look at the very tangible, sort of monetizable things rather than the hypothetical, you know, because there's a lot, as you know, a lot of people talk about a lot of, you know, very theoretical things that could be monetized at some point and the potential financial value of stuff. As I say, because of, you know, what I do and how much time I spend focusing on very tangible financial return from rural land portfolios, basically, I find it difficult to. We talked about valuation recently, and trying to ascribe big numbers to things which are important and we need to deal with them. But as I say, my personal interest and focus is always on those things that are much more immediate and much more tangible in terms of financial value.
That's one of many reasons why we were so keen to work with you on the development of some of our natural capital products and services, especially the B&G side of stuff. And it's funny, I found myself having this really interesting discussion where, so at an intellectual level and as a self-serving level, because we've got a wonderful natural capital portfolio, we want that number to be as big as possible. So intellectually, I love that massive number and green book valuations and value transfer theory, and economically, let's put the biggest value on the environment possible. But I can never realise that investment. It's not real. No one's ever going to pay for it. So I think it's not a credible case to make yet. Whereas the way we've always looked at it when you and I are talking about this is, what are the actual revenues that can flow for this and how do we make it real? And I think there's a risk in trying to build a natural capital economy, which we really want to do. If we're saying everything's worth priceless and billions, no one takes it seriously, and it stops us developing the systems and processes we need.
But that's not to diminish the importance of it, and recognising it and understanding, what can be done, and it's, and trying to help create those markets for those things which we need to be doing and the changes we need to be driving as a society. But you need to differentiate that from those genuinely tangible, immediately available,
credible and theoretical,
to create financial value, which is, and financial value is so fundamental to actually delivering change in projects in reality. Unless, with the exception of, truly philanthropic, charitable endeavours, which are equally important
and wonderful and have achieved tons, but we now need to mobilise the trillions of dollars. I think that's one of the things that, as people have approached us about offering additional investment, and so many things we've picked up, our data-led approach to things, the way we systematically look and analyse landscapes and the detail to which we do that, and the fact that we are openly and proud to be commercially minded in doing it, are the things that have made that approach credible. And the underlying ownership of the asset, I think, has been really important too, because it gives potential investors a confidence that in a world with a developing natural capital economy, they've got that underlying core asset there.
Yeah, in terms of the risk profile of your investment, and there's a definite value in the property interest is what underwrites everything ultimately, isn't it?
Yeah, because worst case scenario, you've got a real estate trust that's trying to do the best thing possible with the land you've got. How are we doing for time? We're good. Okay, so how do we go about going from where we are today with loads of excitement and interest in the natural capital economy? How do we grow that as an asset class? So the chief executive of Schroeder said it had the potential to be the biggest alternative asset class in the world. How do we get there?
So to me, it's all about the tangible revenue streams, because there's, the capital is there to be invested. There's absolutely no doubt. There are a huge number of institutions with vast.
You almost said as we know, because lots of people have been.
But it's, there are a lot of people. There's so much interest in that sector, but it's the ability to evidence, because land inherently is a low returning, at least in sort of operational income return terms, asset class. So you'd be lucky typically. I mean, when you bought this place, I bet it was would have been sub 1% net operating return, and so you've got to have visibility of other sources of return, be that capital growth from alternative land uses, or revenues from natural capital outcomes, whatever it might be. And let's say there are a variety of very credible ways of driving a return from investments in land. But without that, you are in the realms of a philanthropic endeavour, basically. And a lot of that institutional capital that is there to be invested is not, other than is kind of, I guess, the grey area, the boundary between where people are looking to buy carbon credits, for example, or even corporate biodiversity credits to evidence the neutrality, if you like, of their primary operation. That's, I guess, still a legitimate investment in nature in that context. But what is not is capital being placed to A, generate environmental outcomes, but B, generate a financial return. And I guess it's that aspect where you need to be able to evidence the financial return before you can really credibly attract capital, and that's the challenge key.
What do you expect to see in terms of market trends around natural capital in the next 1, 3, 5 years? Pick a time domain that you fancy having a go at.
So trends, I guess it's about those key tangible markets. So carbon, you can debate all day long where voluntary carbon prices are going to go. That's key, absolutely key as to the viability of those sorts of whether it's peat restoration or carbon forestry initiatives.
How much do you think it's trading at a tonne in 2030?
Well, Chris and I were just having that debate this morning.
So, Director of Natural Capital, the co-author of the Stockdale White Carbon Curve, is sat in the back corner of the room, and I wasn't there for that, but that's why I asked Roland.
The honest truth is, I'm not qualified to say. Where we've built financial models for those sorts of things, we will sensitivity test them, and I guess you can get a sense by looking at compliance market prices and the volume of credits that will be available simply to meet the residual carbon emissions of what is very clear is that the demand will be huge if even those largest corporations that have made public net zero statements already satisfy their demand through high quality UK.
There was a wonderful paper this week that actually showed the link between the companies who have bought and invested in carbon credits and those that are showing systematic reductions. Can you remember who produced it? Ecosystem Marketplace, check it out. Which I think is fantastic because I wrote a piece that said don't buy carbon credits as a tongue-in-cheek poke at the fact that don't buy bad ones, buy ones that are predicated on a project that's trying to do good, that's trying to deliver conservation and do the right thing for nature, so we're not having a monocultural rush towards growing carbon credits rather than Sitka spruce. But actually, I need to go revisit that article, scrub it out and say you should be buying carbon credits, but good ones, once you've got your science-based targets in place, once your commitments for doing the right things are there. So I think the two things do go hand in hand.
Yeah, I guess that's just the general level of engagement. So there is going to be a correlation between those that understand.
It makes it bite for the board as well. If they have to write a cheque to buy them, the board want to know that cheque's going down next year.
Totally, and they are the ones that have quantified their emission profile. They're obviously taking action to do decarbonisation. So that to me is not surprising that there is correlation between those two things. But the carbon markets is not something I'm. It's not a core part of the work I do personally. Colleagues of mine do a lot.
Yeah.
But biodiversity net gain is something I'm much more involved in. I think that's a really interesting one because personally, I don't think demand is as extensive as a lot of people believe. It is significant, and there's a lot of value to be created, and there's a lot of value. A lot of money being made in the short term for the right projects in the right place. What I think probably will happen quite quickly is that the market will coalesce around relatively few large conservation initiatives that are delivering at scale. And the thing that always interests me on that is the compatibility between Lawton principles, bigger, better, more joined up, and effectively cost-effective credit creation. Because if you're using, you're spending a lot of fixed costs over much larger areas, you're creating credits more cost effectively, but even leveraging existing management resource because you're placing those new habitats next to existing habitats where you've got management resource available. So I think we won't see some of the sort of best known market participants who are, tying up a lot of sites on leases, paying quite punchy index-linked rents, management fees, etc. In the short term, they will make money because they'll be the only option available to developers in a particular locality. But I think quite quickly they will be outcompeted on price with not schemes that are not delivering the quality, because they will be, and conservation NGOs will play a big part in that as well. But I think we will see consolidation, I think, quite quickly, particularly in those national character areas and LPAs where there is significant demand.
How do you square the circle of the challenge? All BNG is doing is allowing you to destroy some habitat in one place and allow it to be in the other.
Yeah, it's not. That's just fundamentally wrong because you've still got the mitigation hierarchy. Nothing has changed in that respect. You've got irreplaceable habitats that cannot be mitigated through BNG. So they sort of avoid, that whole, let's say, the process remains. All BNG is effectively doing is directing some additional financial resource from the development process to conservation outcomes. And if you look at what particularly high value developments in the south of England are, as a function of the GDP, gross development value, what they're paying toward hard infrastructure, even education, health, affordable housing contributions, the ecological component is a tiny part of the value. So if all you're doing is channeling a bit more resource, ultimately it comes off land value. I don't think that's a bad thing. You are funding some high quality conservation outcomes, and they should be high quality. They're not all necessarily immediately, but again, I think the market is set up in a way to favour high quality, well delivered initiatives over the longer term. And as I say, if you're pushing more resource toward that, it can only be a good thing.
I love that. So we're going to take a short break, but I love that sort of premise and quote that as long as you're pushing more resource towards doing a good thing, that's got to be better for everyone, right? We're going to take a quick break and we'll be back with part 2. Welcome back to part 2. Well, we were just diving into BNG. What are some of the sort of policy challenges and difficulties with the current approach and framework?
One of the biggest issues, I think, is the policy as it stands, not just in a BNG context, but generally planning policy doesn't make adequate distinction between what I think are, both equally worthy policy objectives, but are distinct, are accessible natural green space and genuinely strategic ecological outcomes. And so where policy favours on-site delivery, that is really important accessible natural green space for the benefit of the communities that have been affected by development and the occupants of the new development itself. And that is absolutely critical and necessary, but often it's not ecology. It's not, truly strategic ecological outcomes. And actually, to be able to aggregate that resource and deliver, off-site, in more strategic locations, you can achieve far more, per pound of spend, if you like, delivering, let's say, more cost effectively in more strategic locations. So I think, I hope that over time policy will evolve to recognise that and potentially even look at components of need being delivered on site and other components being delivered off site and actually recognise where certain communities are actually, there is a deficit of accessible natural green space, and actually that should be a priority for delivery as part of the new development. And in other instances where that's not an issue, actually the priority should be on delivering, as I say, truly strategic ecological outcomes in other, probably, regional locations. So it's not about, investing in completely different parts of the country, but as I say, the aggregation of that resource does achieve more than trying to squeeze postage stamps of habitat in semi-urban locations that often are subject to huge, human, pressure and footfall and probably not monitored as effectively. And
it feels disproportionate cost and focus for the value of the outcome to nature and everyone. Are there examples already of sort of cross-local authority collaborations on these and sort of partnership delivery on some of these, or are they all held within specific local authority boundaries?
So they're not. I mean, it's quite interesting. So there's relatively little been done, but I guess, at the moment there is no statutory requirement for BNG as it stands. So it's all a local policy driven requirement where it is being delivered. So actually there is a greater degree of discretion applied in terms of how that requirement is satisfied. There is obviously huge political pressure to see stuff delivered locally. So a lot of local authorities will just insist on, not just local solutions as in within their own administrative boundary, but in some instances much more local than that to the site, and that's understandable. But again, it doesn't really address the true opportunity that is presented by regionally important conservation initiatives and the funding that can be provided. The policy actually provides for, so that, I don't know how familiar you are with the metric as it stands, but essentially you can trade units one for one within either the local authority, the local planning authority, or the national character area, which obviously in many instances will extend over a larger area. And then if you're in an adjoining authority, it's there's a sort of 0.75% multiplier.
Can you explain what natural character area is?
So I forget how many there are, 133 or something across the country of landscape types, and it's based on topography, character, underlying geology, etc. So it's ensuring that the the outcomes are delivered in the same sort of and it should broadly be the same sort of habitat types that are being targeted and prioritised in those areas, etc. But it is one way of overcoming that, what otherwise are arbitrary in an ecological context, completely arbitrary administrative boundaries that LPAs have. So it does allow you to stray outside administrative boundaries without being penalised, financially, effectively, because of having to buy more units.
One of the things we hear from developers when they're talking to us about potential sort of BNG credits is they need that additional clarity that when they commit to something, that as it lands on the planning or the officer's desk, they're still happy with it. Because at the moment, there's a question of, we can try and do the best thing we can in the spirit of what we believe this local authority wants, but we have no confidence that a particular officer will want X or Y. Do you think that's something that's still missing? How far do you think we're away from?
No, that's the case. I mean, I guess what the BNG framework does is provide that greater certainty over what is permissible. And it's the same as planning policy generally, and how national policy filters down to a local level. So you'll still get, and it is the right thing that you get, local nature recovery strategies that will effectively prioritise and incentivise delivery within certain areas. I mean, I think that's a really important component of directing that resource, not just from BNG, but from public grants, etc., and generally informing better land use decisions as to, where we should be developing, where we should be producing food, where we should be, and I think the local nature recovery strategies are a small first step in that direction of, as I say, better informed land use decisions.
So that's a nice segue into the relationship between conservation and farming. Mm. So we collectively have had interesting conversations with people publicly who have happened upon our conversations, you in Devon, me in Scotland last week, who have very different views about how land should be used and decided to share those views with us. How do you feel that tension's working its way out at the moment in terms of passionate people about the farming community and conservationists?
I mean, they're clearly not mutually exclusive is the first thing. I mean, I guess the subsidy regime as has existed in England, in the UK, and across much of the EU, I think has created, some perverse outcomes in terms of,
the worst of which, paying people to damage the environment.
Yeah. And if you look at the damage that was caused, particularly in the agricultural revolution, late 20th century, the loss of biodiversity was absolutely huge. And I think, as I say now, that we better understand what individual parcels of land, have the potential to provide, whether it's food production. And as again, it's not a case of, a binary earmarking certain, sort of silver bullets conservation approach of we conserve ecology here and we farm these bits hard. I mean, because there are certain ecological outcomes that you need to achieve on a landscape scale. But I hope that is the direction in which we're moving, is a better understanding of what characteristics individual parcels of land have and what they're best placed to contribute to society and the environment. And but yeah,
one of the things
away from that.
One of the things we're desperate to try and do is avoid conflicts and fights with people, because there's too much conflict in the world. God, far too much at the moment, especially at the time of recording. We want to try and find collaborations and compromises and ways of doing things moving forward. And I thought, looking back over the last year, I felt as if we were getting some progress around conservationists and the agricultural sector coming together. And the last few months have sort of felt a widening again. And I don't know whether that's the state of the economy or the reason why that's come to be.
There are certain parts of the agricultural sector that I think, we're going into the period of biggest change, the most significant change since, it was certainly this century.
Yeah.
And I understand with direct subsidy being withdrawn, the pressure, we've seen that in the very short term be offset by rises in output, prices and values. So, but the change is coming, and it's absolutely inevitable. And I do have huge sympathy for the communities, and that's the one thing is we can easily sit here and say, well, there are parts of the country that probably shouldn't be farmed, and the contribution they're making in terms of food production is modest at best. But actually, the opportunity that land presents for conservation outcomes and other environmental outcomes, whether it's carbon sequestration or natural flood attenuation or biodiversity, is huge. But actually, the social impact of that change, again, you cannot ignore. And that engagement process is, absolutely imperative. We need to be looking at those sorts of initiatives and ensuring that they are creating employment opportunities and they are embraced by those communities and not imposed. And I think there are some really good examples of where that has worked.
Yeah, I agree. I think it's so difficult because both of the following things can be true. A farmer can be doing their absolute best for the land with the information they've got, the money they've got, and where they are. That can still be doing environmental damage. We can think a conservation solution would be the better thing for that land use, and we can still feel awful for that farmer having to see that reality. We had a site we're really close to where the site transitioned from father to son as part of our involvement with it, and son was explaining to dad that the generations of time and effort and work he'd put into that soil had destroyed it. And seeing that dawn on dad's face, we actually had an independent advisor with us there talking both through the process, and I had to grab the advisor's arm and say, stop. This is not because dad is an absolute amazing gentleman who's the sort of person I want to grow up to be. He was incredible, and he did everything he thought was the right thing to do. But as a result of that, he's been damaging his soil over the years, and the family have now adopted a more regenerative model, and dad's still involved in that and loving the farm still, which is wonderful. That's one of the things we found so much in conservation. It's contradictions and compromises on this stuff. One thing that did worry me this week was an advertisement for the Oxford Real Farming Conference. There was a bullet point in there that a key theme is how do we stop the financification of nature? So an active bullet in there is that being viewed as a risk and a problem to farming. What do you think about that?
I can't see why it would be a risk and a problem to farming. I'm intrigued. I think farmers need every source of, viable source.
That's exactly what I thought. I thought, surely it's a tool for them to choose to use or not. Or
not sure. Yeah, I'd be intrigued.
If anyone out there wants to talk to us about it, please reach out and do, because I hope that as we all collectively value natural capital more, that will make more value flow to the agricultural sector as well, especially those that are adopting an organic, a regenerative, a holistic approach to.
But that's the point, and I think it's really important that we don't, we're not guilty of looking at conservation and agriculture as sort of binary, mutually exclusive land uses, because they're absolutely not. This landscape is one that's been created through agriculture, and as much as Chris might disagree, the conservation outcomes that you want to pursue on this site will require, not only significant ongoing active, human intervention, because that's, conservation in the UK to a greater or lesser extent is, a form of gardening broadly, and whilst we, don't have a fully functioning, trophic system, that's always going to remain the case. And as I say, the sort of habitats, the highest value habitats that you will seek to create here will require, and livestock as well, grazing.
I think the two bits that, and I completely agree, it's trying to find the best use for a landscape. And if we're all honest, that's still going to be dictated by the ownership and thoughts of it, because you are right, we're so far away from a naturally functioning system that even the most purest rewilding approach in this country is still going to have huge impacts and influences on it. But I think our approach is to try and minimise human intervention, restore natural processes as much as possible, and make sure that social bit is taken care of as well and the way we try and avoid causing problems is we don't buy grade 1 or 2 arable land. We're not trying to buy land that obvious the right function for it is farming, which I think is a really important distinction. We try and buy that land that isn't farming first, and then
Yeah, I just challenge that. That's not always the case. So yeah, some lowland peat. I mean, that's not to say none of it should be farmed, but it's a finite resource that, some of which will be completely depleted.
Oh, interesting. So some of the grade 1 and 2 arable actually
some of the best veg farming, irrigated veg farming land of the country is deep lowland peat, which is degrading and oxidizing at a rate of centimetre and a half a year, and huge carbon emissions.
It's such interesting. So I hadn't considered
gone in a very short space of time. We will not be there to be farmed.
So my intent was to be respectful to agricultural uses of that from a social perspective, but actually through an ecological lens, that's a habitat that is a huge risk.
Perspective, it's not sustainable in the most fundamental sense of that. You will not be carrying on that farming in some cases 20 years time.
No,
not, because it will have gone. And you'll be, on unlined clay.
We visited a salt marsh site with a view to buying, and the gentleman was growing maize on his salt marsh. And he said, "Best product I've ever grown." So that's interesting. How many years are you in? He's like, 3 years now. He said, "It's got better every year, except this one. It's down a bit this year." It's like, okay, great. Yeah, so very much a short-termistic view in terms of what we're doing there. Let me get back to my list of questions, Roland. So we covered on carbon, we've covered on BNG. If we're sat here in 5 years' time, what else will have changed in the rural landscape? What do you see coming? So you saw natural capital coming away off with you sort of aligning interests.
No, I didn't see that coming. I just enjoyed it. And what will change? I mean, I think land markets are something I spend a lot of time thinking about, talking to clients about, because it's, your most significant capital investment is in the land asset. The land market in the UK is unique, completely unique, and tax has had a big bearing on it. I mean, it's quite interesting if you look at the volume of turnover in a lot of other countries in the world, and even historically in the UK, we are at an absolute fraction of that. We're sort of, the last few years have been sort of 0.2% of the UK land base has been traded, and last year we were down to about 0.1. It's up again slightly this year. It's quite interesting when you look at the potential for tax reform, and Labour government have come out and very openly said they're going to look at restricting some of the capital tax reliefs. Rollover relief is a big one, so the ability to defer capital gains that have been realised from sale of business assets, which is very relevant to land, because there's obviously lots of people, people sell development land and then they look to redeploy. You've got a window of 3 years effectively having, realised that capital to reinvest it in a qualifying asset to defer the gain. So at the moment, that's quite a big driver for demand. But the big one, I think, personally, for supply, people talk about people buying land as an inheritance tax shelter because there are inheritance tax reliefs available as well for land ownership. It has some bearing on the demand side, but I think the biggest impact is actually on the supply side, where a lot of private landowners, whether that's discretionary trusts or private individuals who have an inheritance tax chargeable event that forthcoming in the next number of years, that are effectively deferring a sale because otherwise they'll be crystallising a 40% tax liability, that would otherwise be thinking very seriously about disposing of their land. And I think if there were to be a restriction, and meaningful restriction or withdrawal of those reliefs, actually we could see a meaningful increase in the supply of land in the UK. And that, as I say, in such a thinly traded market at the moment, that's what sustained prices where they've been, and we've seen growth in the very recent past. But there is not that depth of demand to soak up. And as I say, when I say a meaningful increase in supply, if we went anything close to historic norms, that's a sort of tenfold increase on current level of supply, which nobody can say that there is that level of demand to sustain prices where they are. So I think that's a really interesting dynamic. I think we've seen in the very recent past, and I think we're going to see an acceleration of the trend toward different characteristics being valued differently in terms of land values. It's quite, so I did a study master's degree in real estate finance 3 or 4 years ago, and I did my dissertation on the impact of direct agricultural subsidies on land prices. And one of the things you can really see, very evident in the data, is that when you introduce a direct flat rate of subsidy, so the regime that we've just, or in the process coming out at the moment, prior to that there were intervention prices, so it was, support payments for production, so incentivized greater production. So, hence what led to butter mountains and all the rest of it, and overproduction, and then subsequently quotas being introduced. But when you go from a system that incentivizes greater production, you're actually exacerbating the differential in productive capacity. So greater level of subsidy is directed toward the most productive land under that regime. You then go to a flat rate payment for every acre of land is worth the same across the country. And you sort of, if you think in a capital asset pricing model framework, you've got some annual income coming from your farming trade, which is sort of volatile, subject to commodity prices and weather patterns and all the rest of it. And then you've got a check coming from the government every single year. The theory suggests that should be capitalised at a much lower discount rate. And absolutely that's what's happened. And so you just get this sudden homogenisation of land prices across the UK. And you don't get the true distinction in terms of, a truly productive land, but increasingly more recently land that has potential to deliver the whole range of other outcomes that we're now looking, to land for, basically, like, carbon sequestration, biodiversity, etc. So I think, that differentiation is a trend that we will see continue.
Amazing. Roland, I love deep diving these topics with you. If you are not the most, you've got to be one of the most influential people working on BNG and nature as it relates to land management in the UK. So thank you for sharing your time and wisdom. And that's your shoot room session done for that. Thanks, guys. Bye-bye.